Hello and welcome to another update video about MATIC. On the MATIC chart, the price continues to be in this really, seemingly endless range, right? This sideways consolidation. It's not moved. It's just sort of moving sideways. No change, up and down, no clear direction. Basically, it's forming at the moment again higher lows, but also lower highs. So unfortunately, I cannot really clearly give you, a strong statement, something convincing to say that we are already moving up as per the white scenario, which is the directly bullish pathway. And on the micro level, this is sort of what I'm watching as long as this red line is holding. So the 63.5 cent level, let's call it 63.3, basically the wave 2 low that I've labeled here on the 1st of May. Again, 63.3 cents. As long as this level is holding, it is technically valid to say that we are in a third wave rally. We had an initial move up, which I call wave A of 3. Again, this is at best a diagonal, so it cannot be an impulse. Just not possible. Okay, it's also not moving in any impulsive waves. So it could be an A wave, then a B wave pullback, and then this C wave could be unfolding right now. But then again, the C wave isn't moving as an impulse, so I don't like that. If we are dealing with diagonals, then at least the C waves in those diagonals are ideally impulses, but it's not. So that means it could be wave C as a diagonal as well. Then it gets very much a hopium count. It's also possible that my idea was wrong, that this here is an A wave. Maybe the A wave sits here and we are only now starting the B wave, but then the A wave should go a little higher. So for now, I leave it as it is. It is technically even possible that this B wave is a triangle. Okay, so there's a lot of fancy stuff we can do here. It's just boring. And we really need a breakout. We need that move above the recent high of 77.7 cents for the price then in wave C of 3 to reach 85 to 87 cents. Better 87, obviously. This is actually 88. This is the 1.38 extension. Basically my first ideal target for a third wave, as you know. And then the fourth wave typically would retrace into the region between the 78.6 to 100% extension. But we can then, double check against the Fib retracements once the third wave has actually formed the top. Then we can be a bit more precise there. And from there, a fifth wave rally should take the price minimally to 93 cents, better 97 or higher. So, and then I have 5 waves. And only if I get these, then I can really confirm that the low is in. Until then, I can still give you the relevant support levels. But at the moment, I can really only give you the red line there as critical support and invalidation point for the white scenario. Because if that is broken, that level to the downside, then the yellow alternative, actually, it's just it's nearly 50-50. Do we get another low or not? I mean, the market itself has no idea. As you can see, we're just moving sideways. So the value of the analysis at the moment is to understand the relevant invalidation points and to understand, okay, what happens if we break out to the upside? You have very clear levels to watch then. To the downside, it's 58.3 cents as next support. So this would be tested next if we break below the red line there at 63.3 cents. And below 58.3, we have 53.7 cents as the 88.7 Fib level. That is, however, too low for a reliable wave 2 still. So it would be acceptable if we get a wick down and then rally, fine. At the moment, we're just moving sideways. Very choppy, overlapping price action, and we just need to be a little bit more patient. Just be aware, I'm not labeling really every small wave here. It just doesn't make any sense. It would change. I can tell you that already now. This will change. But yeah, you have the key levels against which you can focus on higher if you choose to. It might be a little bit more likely at the moment that we go up, because so far it's been holding higher lows, and formed actually a higher high here. But yeah, it's nearly 50-50. So on this time frame or degree, if we zoom out a little bit against the yellow support zone, looking at the bigger picture, this large 1-2 setup, I'm focused on higher. Well, as long as we are holding 58.3 cents below that level, if it's a sustained break, I would prefer more bearish alternatives. Okay, I see this actually as the same scenario. Okay, do we get one more low or not? It's really just noise. Important is that we're holding 58.3 cents. I did add the 88.7 fib level below that, but just because we're already so deep in support, and I specifically point out here the invalidation point because support is not invalidation. So technically you can use the entire space all the way down to the invalidation point at 49.5 cents. It's just that if it gets too low in this wave 2, this setup gets less probable, but it gets better in terms of reward to risk, right? Yeah, that's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.